Hello and welcome everyone to Gold Asset of the Day for the 21st of September 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So this week we have seen platinum prices, they broke out to 5-week highs. In fact, we took the opportunity at the start of the week to again scale out of more profit as we saw platinum prices breaking above $920 per ounce, increasing the amount banked to 50%. This comes off the back of last week where silver had the biggest one-day breakout in a year and a half, the biggest breakout since February of 2021. We also locked in half of our profits on that market. And now we have gold trading all the way back at 2-year lows, finding support at $1,660 per ounce and resistance here at $1,680 per ounce. All of this pressure that we're seeing at the moment, of course, was to be expected off the back of quad witching, which we highlighted to you previously. September, normally a very strong month for the dollar. Previously, we hit our dollar target at the 109 level for 385 points profit. With our clients at the Gold and Silver Club, we expected the dollar to be strong this month. We've got 10-year treasury yields. They are breaking above the swing highs. You've got stock markets under pressure after quad witching here. You've got cryptocurrencies, which are again tanking another 10% in the last week. Just look at Ethereum, look at Bitcoin. They're massively under pressure right now. Whereas we do have gold just holding on around that 1660 to 1680 level, and you've got markets like platinum and silver all breaking out at the moment. So absolutely all eyes this week will now be on Wednesday's FOMC statement. That will be at 7 o'clock London time. 30 minutes afterwards, we've got the press conference from Jerome Powell. Now, this week in particular is going to be a 4-day central bank rate hike extravaganza. This was all kicked off by the Sweden central bank at the start of the week that went ahead with a 100 basis point rate hike, which is one of the biggest in years for the Sweden central bank. And with that, that's now going to put pressure on the Bank of England, on the Federal Reserve, on the Bank of Japan to follow suit. So this could be an explosive week because we have other central banks that would potentially also be much more aggressive with their rate hikes over the course of this week. So that again will provide plenty more volatility for you to capitalize on, particularly as you've got gold at such a critical level at that 1660 level right now. Again, hedge funds and money managers in the last week, they tripped their net longs on gold by another 3%, but this was all to be expected, this pressure to the downside throughout the month of September, especially as you get into next week as well. We've got end of quarter profit taking. We've already had quad witching as well, but this could likewise also set up for great buy opportunities around that 1660 handle. We identified this with you last week and subsequently on Thursday through to Friday. Gold prices, they found support at 1660 and broke back out to 1680. They've then come back down to 1660, back to 1680, and we're just ricocheting at the moment between those price levels. So what we need to keep an eye on as we go into the FOMC statement on Wednesday is whether that 1660 level now holds and whether we catapult off this zone and start making a move back towards 1700, or whether gold prices need to go lower, giving you an even better opportunity to accumulate at lower prices. Now again, this comes down to utilizing data, statistics, market intelligence. Ditch those outdated technical analysis or gimmicky technical indicators. Is 2022 the age of data where you do want to be utilizing market intelligence, statistics, learn and understand the daily, the weekly, the monthly, the quarterly cycle for each commodity. Further compound that with the intermarket correlations, the ratios in the market, the narratives in the market, the fundamentals, the macro economics, and also how the hedge funds, money managers, banks and institutions are positioned in the market alongside the commercials, and that will help you massively in order to get an edge. So with that, if you would like to join our community of professional traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to join our professional mentorship program.